What's going on, you guys? My name is Daniel, and here on this channel we talk about growth stock investing with a focus in the Canadian market. And today I'm doing a quick video update on all the telehealth stocks because we did see a bit of a bounce in quite a few of them. So first off, when we look at some of the telehealth stocks in the States to see what they're doing, we can see that Teladoc is up by 5.14%. We can also see that American Well is up by 5.36%. Then when we go over to the Canadian market, we have Well Health, which is up 5.95%. Then we also have CloudMD stock up by 15.77%. And then Jack Nathan Health is up by a whopping 16.67%. So let's discuss why we saw a huge rebound in telehealth stocks today. Here are my thoughts. First off, when we go to Well Health's chart, we can see that Well Health has been selling off pretty rapidly. It dropped significantly below the 50-day moving average as of yesterday. There's this full red candle here, and today this green candle shows a huge rebound in Well Health. And based on the RSI, we can see that it's pretty oversold, nearing the oversold line of 20, but not quite there yet. And the MACD has also kept going down. We probably want to see for the next couple of days if this reversal pattern continues to happen. But for Well Health specifically, there was some interesting news that came out about the company. They released this update on the company where Well is partnering with a leading national lab company via its Telehealth subsidiary in providing services to support patients who are interested in obtaining COVID-19 testing. Well is also working on offering its own direct-to-consumer offering for the sale and support of COVID-19 antibody testing. Another major news item is that Circle Medical, Well's majority-owned U.S. subsidiary, has reported that its current month-to-date result in November reflects better than a 40% increase in revenues as compared to the previous month. So they increased revenues by 40% in a single month. And this is probably because of the rise in cases in the United States. And more people are turning towards telehealth to get their appointments. So based on their November revenue, if they're able to maintain that, this would put Circle Medical's yearly revenue run rate on more than 10 million Canadian dollars. And last time when I talked about Circle Medical, I think the run rate for this company was $5.7 million. And that might have been in September. So October it increased again, and in November it increased to $10 million per year. Circle Medical also plans to launch its own mail-in kit for COVID-19, where it sends this kit to a user. The user takes a swab or whatever the test is, sends back those items, and then Circle Medical will take it, analyze those items or just the DNA material, and figure out whether the patient is actually positive or negative for COVID-19. Well has also announced or completed 4 acquisition transactions in the last several weeks, adding approximately $38 million in incremental annual revenues, based on past performance, which puts Well's annual revenue run rate at better than $88 million. Well maintains a strong and growing pipeline of new acquisition opportunities, including another 10 signed LOIs that represents an additional revenue and EBITDA growth opportunities. The company has more than $100 million in funds presently in treasury with no debt. So this is a pretty big update for Well Health Technologies because last time when I covered their quarterly earnings, their annual run rate based on those earnings reports was around $68 million. And today now it's $88 million. So that's within a span of I think 1 week this update has come through where their annual revenue run rate has grown by $20 million. And with these new 10 signed LOIs, this means that they have 10 different companies which they have a letter of intent to purchase using the funds that they have right now, that $100 million plus in cash, as well as no debt to pay off. They can pour all this cash into these signed acquisitions and probably still have a bit left over after that. Most of the companies that they're acquiring are under $10 million, probably anywhere from $2 to $5 million on average. And if all these acquisitions end up closing by maybe the next year in January or February, I predict that their annual revenue run rate will probably be somewhere between $120 million and $150 million. This could be big for Well Health because looking at their current market cap of $1.236 billion, according to Yahoo Finance, this puts them at a PS ratio of around 10, which is very cheap for a health tech stock that's growing at the rates that they're growing. So when they released the Q3 earnings a couple weeks ago in November, it was at $68 million, and if they can reach 120 or even $150 million, that represents almost doubling their annual revenue run rate in the span of 4 months. And with that kind of news, the stock will probably continue to move up, maybe to $9 or $10 through the month of December and January. And if that does happen, I do expect Well to continue to release bought deal offerings. As the share price increases, This allows Well to release the same number of shares as their previous bought deal offering, but raise even more money. So there's less shareholder dilution if they have a higher share price. Now moving on to Doc and JNH, which both popped around 15 to 16%, even more impressive than Well. And I think the reason why these two popped is because they are quite heavily sold off compared to Well Health. We can see Doc at its max is trading at around $3.20 or $3.40, and it dropped all the way down to $2.10 yesterday. And today it rebounded from that level all the way back up to $2.57. And I think that there was a bit of a support line here based on the previous bounce up, which is probably why it bounced heavily off of this line back up to the upside. But I don't know if Well Health is going to be able to continue trending up past its previous all-time high because this wedge pattern, which I drew here on the chart, actually broke down. But one good sign for CloudMD is that we can see that their earnings are coming up on November 27th. Looking at detail in CloudMD's stock though, we can see the one-day chart here. They had a pretty huge bull run at the end of today. And honestly, I don't exactly know why this happened. The only thing is maybe there's just a lot of buying pressure from big buyers who are coming in, seeing that there was a huge consolidation today throughout the day where the bulls and bears fought, and then the bulls decided to take off and push the stock price higher. So I think that if CloudMD ends up releasing amazing earnings and has some really good news in terms of future growth, then we could see the stock continue to skyrocket up higher, maybe to the $3.50 level again, and possibly beyond that. As for JNH, if we look at the JNH chart, we can see that Jack Nathan Health has sold off quite a bit from its previous all-time highs, around $2.70. And it's been pretty flat here. I would almost say there was a bit of a wedge here, which I'll just draw right now. But then that pattern didn't exactly come true in terms of it didn't pop after the wedge closed in. It just kind of stayed flat. So maybe we have some sort of support pattern forming here at around the $1.15 mark, where it jumped off of today into the $1.33 mark. There was a bit of news on Jack Nathan Health earlier this morning where they're going to be opening up 50 new medical clinics in Mexico. And they're going to have 8 locations opened up by December 2020. So basically next month. And this is probably what caused the stock to pop up, because if we look at the volume for JNH, all the volume was in the morning when the news was released. And after that, the volume declined pretty heavily back to what it was a couple of days ago. But in general, for telehealth stocks and why they rose, this is one article that I saw today. And it references that hospital visits recovery remains flat while popularity of telehealth services grow. Further down in this article, it says over 2/3 of recent telehealth patients stated that they are at least somewhat likely to continue utilizing telehealth services after a COVID-19 vaccine is made available. What more, 77 expressed satisfaction with their most recent telehealth visit. So it seems like people are pleased with telehealth and they're willing to continue using the platform even after society goes back to normal or somewhat normal if a vaccine is introduced. So based on the study, it looks like telehealth is here to stay, and that's probably why we see the American telehealth stocks pop as well as the Canadian. One other possible reason as to why these telehealth stocks rose today is because Ontario continues to see a rise in cases, and Doug Ford on Friday is planning to announce what his plans are for a possible lockdown, if that ever comes to fruition. Possible COVID-19 lockdowns coming to Toronto, Peel, and York as Ontario reports 1,417 new cases. Doug Ford warns of possible lockdowns. Ford says tough new measures coming to COVID-19 hotspots as Ontario reports 1,200 cases. And Ontario Premier says he will announce new COVID-19 measures later this week. So I think that with the new COVID-19 measures, this will push a lot more people towards telehealth. And as they get used to the telehealth platform, then after they come out of the pandemic and they realize how delightful that experience is, then they'll continue using it because A, they don't need to get out of their house to be able to book an appointment and also attend that appointment. And B, it's just a lot easier for schedule-wise. So that's a quick update that I have that took a little longer than I expected, but hopefully you guys got some value. If you did, leave a like down below, as well as leave a comment down below if you bought any CloudMD, Well Health, or Jack Nathan Health yesterday when they dropped pretty heavily. I, for one, did buy some Well Health yesterday at $6.85. And as I mentioned in this video right here, I'm selling all my dividend stocks in the coming weeks to buy Well Health. If you want to check out another video on telehealth stocks, check that out right here. If you're there, I'll see you there. If not, keep up the grind and have a great day.